Hi guys, good evening and welcome to one more YouTube video. This video I am making it on Diwali day, so let me take this opportunity to wish you and your family a very happy Diwali. As a Diwali gift, today I am going to share one of my very secret strategy, that is secret moving average strategy. This strategy I only discuss with my webinar students, but as a Diwali gift, today I am going to reveal that strategy to all of you. So let us see what is this strategy is all about. If you are following me on YouTube for a long time, then you know that I am a pure price action trader. I don't follow indicators because I trade based on buyers and sellers psychology, that is nothing but price action. I always say that price action is supreme in trading. Price action is everything. Indicators are just derivatives of the price. But one indicator which I have been using for many years and I still continue using, that is the moving average. So which moving average I use it, how I use it, everything I'm going to reveal in this YouTube videos. When I started using moving average many years back, initially few days I was consistently making profits. Then suddenly started failing and suddenly I started making losses. Suddenly my stop loss started getting hit. Then again I went back and I started doing the research and I started doing back testing. Then I made some changes in my moving average. I realized what mistake I was doing and I made some changes in my moving average strategy, and again I seen consistency by using moving average. So what is that mistake and how I changed it, that is I'm going to discuss in this YouTube videos. Many of you may be following moving average for very long time and you know very well about moving average, but still I suggest you to watch this video till the end, because I'm going to discuss and share some information you will not see anywhere in the YouTube videos. Because this video is not just a moving average video, because there are many moving average videos on YouTube. In this video you are going to see one of my favorite strategy where I club moving average along with the pivot points, and how I take the trade, that I'm going to reveal in today's secret moving average strategy. That is going to be my Diwali gift for all of you. So now without wasting much time, let's go to the presentation and let us see what is that secret moving average strategy. Hi guys, now let us start with the moving average secret strategy. Let us see what is that secret strategy, how to use it. Before that, let me just give you brief overview about the moving average. Now, what is moving average? What actually moving average is? Moving average is nothing but average closing price of last 10 days. In case you are using daily moving average, 10 last 10 closing price average is known as moving average. For example, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So last 10 days closing price, and when you average it, whatever you see, that is the moving average. For example, if you are using 20 moving average, that means last 20 days. Suppose you are using moving average 5, that means last 5 days. That means only day 1, day 2, day 3, day 4, day 5. So that is what moving average, just to give you a basic knowledge. And if I had to explain it in layman language so that people who are very new, for them, for their understanding, let me give an example. If you are going to fish market and you want to buy your favorite fish which is generally available in the range of 90 rupees to 110 rupees per kilo. Okay, that means what is the average price? Around 100 rupees. You know that on an average it is available at 100 rupees, and the day when you go there, you see that it's available at 130, 140 rupees, maybe because of high demand. 100 rupees, which was average price most of the time, it is available at 130, 140, 150, going on at this price. After few days, it comes back to 100 rupees. What is that? That is the average price, right? So what you will do, you will go and buy it. You will not buy it when it is trading, when it is available at 130, 140, because you know that it is more than average price. You know the average price, which is 100 rupees. So whenever it comes down to 100 rupees, you go and buy it, right? You will not buy it expensive because you know the average price. So that is what, just to give you an example, that how moving average, knowing what is the average price, it will help you to buy at that price. For example, you know that price is going like this, and you know that there is a specific moving average. When it comes back to that price, that means that is the average price, right? This is the average price. Moving average is the average price. When it is going like this, you know that it is expensive. So you want it to come back to that average price. Just like how I given that fish market example, that 100 rupees it is available on an average price, and you see that 130, 140 is expensive. When it comes back to 100 rupees, you go and buy it. So that is same thing. Moving average also can help you to know the average price, so that you can wait for price to come back to moving average, and then you can buy. There are three types of moving average. One is called simple moving average. Second is called weighted moving average. Third is called exponential moving average. Now I'm not going into deep into it. I'm going to discuss one by one, because here we are not do the research on moving average, right? So I'm sure no one is interested to do the research on moving average. All of us are here to make money. Like you, I am also here to make money, not to do the research. No one is going to give us doctorate because we are doing research on moving average. So let us not get into research. Let us just know the basic difference and which is better, because that is the most people have the confusion. SMA better, WMA better, or EMA better. Which one I use? So let me just tell you what is the difference between SMA, WMA, and EMA. SMA known as simple moving average, WMA weighted moving average, EMA is exponential moving average. Which is better? Now out of SMA, WMA, EMA, WMA is not commonly used. So we don't have to go into WMA. Let us discuss about SMA and EMA. What is SMA? Simple moving average. EMA is exponential moving average. So what is the difference between both the two moving average? To be frank with you, there is not much difference between SMA and EMA. Only difference is this is the slow moving average. EMA is the fast moving average. It is faster. So what I mean by slow and faster? Let me give you an example. This is the price. Okay. For example, this is the Nifty going like this in the strong uptrend. SMA will go like this. I said SMA is slower. EMA is faster. This is your EMA. So SMA is slower. That means SMA doesn't move as fast as EMA. EMA is much faster and it is closer to the price. So that is why I don't prefer SMA. I go for EMA. You can continue using SMA, but my preferred moving average is EMA, and that is what we discussed. Difference between EMA and SMA, right? Now comes to the point, which is the most commonly used moving average. There is 5, there is 10, there is 20, there is 50, there is 100, there is 200. There are so many moving average which you can use it. Which is most commonly used? I'm sure people who are using moving average, they will first say 20 is the most commonly used. Yes, that's correct. 20 is the most commonly used moving average compared to any other moving. Now comes the question. Why 20? What is so special about 20? Why not 50, 100, 200? Why it is 20? So many people, I'm sure, even though you are using moving average for many years, you still may not be knowing that why 20 works most of the time. If you ask some experienced trader, I'm sure he will say that 20 works better because most of the people use it. That is wrong. If anything, most of the people use it, then it is less likely to work. So the reason why 20 EMA works most of the time, because in a month, there are around 20 trading days. If you remove Saturday and Sundays, which are trading holidays, so in a month, there are around 20 trading days. So based on that, they say that 20 moving average works better than any other moving average. Okay, now comes the most important, moving averages as a buying and selling sequence. This is where I'm going to discuss the strategy, that is the secret strategy. First thing you should know that moving average is powerful. 20 EMA, I'm going to discuss only 20 EMA. In this video, I'm not going to discuss anything other than 20 EMA. So whenever I say EMA, remember I'm discussing about 20 EMA. You should remember one thing, moving average works only whenever market is in the trend or that instrument has to be in the trend. It can be uptrend or it can be downtrend, but it has to be in the, if it is in the sideways market, then it is not likely to. So moving average has to be sloping like this. 20 EMA has to be sloping like this. If it is flat like this, then it is not course. I said earlier in the video, I said I was doing one mistake earlier. And what mistake I was doing? I was thinking that moving average works every time. I was thinking that whenever I see moving average, that means it's a support and resistance. But only after some time I realized that moving average doesn't work if it is flat. It has to be like this, sloping. So that is the one thing. Second thing is that, which I'm sure most of you may not be aware of it, moving average like this, okay, price going like this, you know that most of the time it takes support, because moving average like support and resistance. Moving average only powerful if there is any other support below the moving average. It can be pivot. Most of the time I use moving average along with the pivot for better entry. That is one of the important secret which I don't discuss anywhere other than my webinar students, but which I'm discussing here. That is moving average. If you club with pivot, then it is high probability. Sometimes it happens that you say that, oh, it's taking support, I'll go long, and suddenly your stop loss. Why it happens? Because price tend to take support from moving average and pivot most of the time. Price tend to take support from the pivot point most of the time whenever it's in the uptrend or whenever it is in the downtrend. If moving average like this, and you think that you will short here near the resistance, price goes and then comes down. Reason could be there is a pivot. So that's why I keep telling it my webinar students. Even in my webinar videos, I say that never keep your stop loss below the moving average or below the candlestick. Stop loss should be below the peak. Stop loss should be above the peak. Okay, not below the candle. If price is going like this, going like this, going like this, going like this. So if you ask me, buying here, stop loss here, better than buying anywhere else. Buying here, I don't suggest. Why? Because along with moving average, preferably there should be some support. Preferably it should be pivot points. So buy here, keep your stop loss here, below the pivot, not below the candle, not below the moving average. Okay, now let us look at the charts. I have marked some days where there was a trending day. So let us look at those charts where there was trending day. First one is 28th October. I've seen that 28th October there was a proper trending day. All right. So look at this. Look at this chart. How strong the trend was. Opened with a first red candle and then it kept on going down. It took the resistance, came down, took the resistance, and again it started the trend. Now let me show you where you have to enter the trend. See, sometimes what happens, you see that, oh, there is a big red candle and you are confused whether to go short or no, and it keeps going down, keeps going down, keeps going down, and you miss the bus, right? You think that, oh, I should have taken my short entry here only. Look at this. I missed the opportunity to make the money. So in such case, what you should do, you should never run behind the price. You should not run behind the train. Same thing in trading also. Don't run behind the price. Wait for some retracement. Retracement means let it come to the moving average and then only enter the trend. So I have given that fish market example, right? If there is a fish which was available at 100 rupees average price and it is going at 130, 140, you will not buy it, right? You want price to come back to the average price, then you go and buy it because it is as per the average price. Same thing in moving average. You should wait for price to come back to the average price. So what is the average price? Moving average is the average price. And this is the candle you can short. Why not this candle you have to short? Because it's not a bearish candle, right? You are shorting. For shorting, you need a bearish candle, not a bullish candle. So another thing you remember, I said, don't short near the moving average. If there is any pivot as a support, then only you should go short. High probability if there is a moving average and the pivot, most of the time price tend to come back to the pivot, take the resistance, So if there is a moving average, then it's a high probability, but don't keep your stop loss above the moving average. If you are shorting here, don't keep your stop loss somewhere here. It should be above the pivot, above this level. So this is the high probability short, but this is not high probability, even though it worked, because there is no pivot resistance above. Next resistance is here, right? So keeping stop loss here would have been very big stop loss. So best entry would have been here. Now let us look at the sum of other days where this setup has happened. Okay, look at this. Next, it happened on 11th of October. 11th of October, there was another trending day. Candle opened with a huge bullish candle. It kept on going up and you missed the bus. Such time, don't run behind the bus. Let price come near moving average. It came near moving average. Then where you will enter? You can enter here in that pin bar or here. But if you enter here, your stop loss should not be here. Where your stop loss should be below the pivot. What pivot is this? This is the weekly pivot. You should never rely only on moving average. If there is any pivot also along with moving average, then high probability, because your stop loss should go below that. So your entry could be here by stop loss below the pivot, or entry could be here once you see a green candle closed above the moving average. Now let us see when it happened. Again, this setup in Bank Nifty. Another trending day, you can see that on 28th of September, opened with a big bearish candle, narrow CPR, and trend continued till here, then reversed. So where is the entry? Entry would have been here, but you can see that there was no resistance above the candle, but still it worked so nicely. When it came near the 20 MA, it reversed. It came near the 20 MA, it reversed. So here was one of the entry by keeping stop loss above the CPR. Here another entry, but this was high probability because there was another resistance, that was CPR, right? I said high probability when there is, along with moving average, if there is any other resistance like pivots or CPR. This also worked nicely, but there was no resistance, pivot or CPR resistance here. But look at this. It took the resistance and a big crash. After that, it again touched the 20 MA, but look at the candle size. Such a big green candle. Now you should not short. It is the indication of trend reversal most of the time. So that is what I wanted to show you about how moving average can work nicely on trending day. Okay, this is 23rd September. It's a strong trending day, right? Strong trending day. It kept on going up like this. Then wait for price to come to 20 MA, but there was a red candle. Wait for green candle. This candle you could have gone long, but your stop loss should be here. Your stop loss should not be here, because most of the time price tend to come back, took the support near the pivot and likely to go long. What happens if you take a long trade here? It comes near the pivot. By that time your stop loss here, it takes the stop loss and it goes up. So keep that in mind. Okay, keep that in mind. So this is something I'm sure you will not see any YouTube videos, people who are discussing about moving average. No one tells you about this, that the top secret is moving average alone is not enough. Along with the moving average, you need another support, and the best support is pivot points. Okay, this is the Nifty chart. Again, 28th October opened with a big bearish candle. It kept on going down, and then it came near the 20 MA, but look at the candle. It's a green candle. So wait for candle to reverse from 20 MA. Now go short, but now stop loss should be here above the swing high. Stop loss should not be above the candle. You can see that again it came near the 20 MA, face resistance. Now let us see one more chart. Now it happened again, trending day on 21st of October. Market opened with a big red candle, broken the CPR, made some consolidation, again went down. Where it took the resistance, look at this. Look at this. Then big green candle and reversal. So best entry, I would say this. Why? Because along with the 20 MA resistance, there are two more resistance. One is the daily pivot and the blue color is the weekly pivot. Daily pivot weekly pivot. So this is what I call as a high probability trades. That means chances of working is higher, but not 100%. Nothing works 100% in trading. It's all probability. So you should only take high probability setup, keep your stop loss, and even it works 50% of the time, still you can be a profitable trader. So that is about today's video on how moving average can work nicely on trending day. And second thing, I have revealed one of my secret strategy, that is, along with the moving average, you need another resistance or support like pivot points. So that I said you will not see anywhere on any YouTube videos. I have not seen anywhere on YouTube videos where someone discussing about moving average along with the pivot points. They only talk about the moving average. They don't talk about pivot points. So moving average with pivot points is a deadly combination. That is what we discuss in our weekend webinar, and weekend webinar details you can see below my videos in description section. So you have seen how simple this strategy is. Anybody can use it. Only thing you should know that you can use this strategy only on trending day. It can be uptrend or it can be downtrend, not on the sideways day. So that means you should know when is the trending day, when is the sideways days. But also remember one thing, trending days are not very common, sideways days are very common in the market. So you should trade only on trending days, or you should look for the instrument which are in trending mode. So that is about the secret moving average strategy. So that is my Diwali gift for you. I hope you learned something new in this secret moving average strategy. Another thing I want to discuss in this video. Many students message me saying that, sir, this is the Diwali time, so give me some discount, give me some offer on your webinar. They were saying that other trainers, they are giving the special discount, offers, combo offers and everything during the Diwali, but you never give any discount or you never give any offers for your students. For them, I have one question. Do you anytime see outside the Mercedes-Benz showroom there is a discount or there is a offer? You see any discount or offers outside Mercedes-Benz showroom? Or for that matter, luxury retail brand like Louis Vuitton, do you see any discounts or offers outside the retail shop? Or for that matter, do you see any discounts or offer outside the Apple showroom? For iPhones, do you see any discounts and offers? You never seen it. You may say that I've seen offers for iPhones in newspaper and all this, but remember that offers are not given by company, that offers are given by distributors. So premium brands like Mercedes, Louis Vuitton and Apple, and there are many other premium brands, they never give discounts and offer. What is the reason? Because they focus on the quality, they focus on their brand image. I have been in sales and marketing for almost 20 years and I know what is in and out of sales and marketing. Whenever somebody says that he's giving you discount, he's giving you offers, Diwali offers, New Year offer, Christmas offers, that is just marketing gimmicks, because they don't have demand for their products, so they have to do all these discount offers. But brands like Mercedes and iPhone or Louis Vuitton, they have their own customers who buy their products irrespective of price because of the quality. Same thing like my webinar also. I don't do any marketing, I don't do any promotion, neither I give any discounts or offers, because my webinar always in demand, always my webinar gets full. So that is why you will never see any discounts or offers, because I focus on giving the quality content. So if you want to be part of my day trading webinar, then go below this video in the description section and click the day trading webinar link. If you are interested, contact me on WhatsApp or email. If you are into full-time job, you think that day trading is difficult for you, so I have swing trading and positional trading video also, that is advanced swing trading strategy. If you are interested, you can click that link and you can buy my swing trading course. So with that, I am ending this Diwali special video, that is secret moving average strategy. I'll see you soon with a new video. Until then, bye and take care.